hope you had a good rest. It was a long day yesterday and we've got another long day ahead of us today. I recommend just to take a couple of breaks and get away from the screen as well, because you can't really be looking at your screen for 12 hours. It's a bit ridiculous really. So I advise to take regular breaks. It's going to be a long one today, and it's kind of like an uncertain thing with the FOMC. Brainard was saying that they're talking about increasing the QT, and so that took a little bit of the sting out of tonight. I think if Powell had said it would cause a massive turbulence, but one of the Fed speakers says it's a little bit more manageable. So I think it took a little bit of the sting out from tonight. We could still be a little bit risk off. At the 24-hour difference we're a risk off, but the big picture we're risk on. We're below the yearly pivot and we're above the 20 psychological handle. Just a note on the daily shifting is that I've changed this now, because before it was in a like a colour scheme, and now I've just done a formula. If it's below 50 it's a buy, if it's above 50 it's a sell. So it's a little bit easier to see, and we see how we've got that mismatch. Euro is now matching, pound is matching, Kiwi is not moving, dollar is matching. So GU and EU could be good because they're at least making sense at a dynamic level and at a static level. So what you want to try and do is get colours to align. So there's red, 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 there's orange, red, red, and then there's green, green, green. So GU and EU could be good sentimentally today. However, we've got FOMC. There's the bubbles, and there's got the euro as strong sell. Yen is going back to strong sell. I think what's happening with Aussie, I think the retail guys from Reddit, they could be involved in this, because we're stuck down there for a long time, and normally what happens is that a bubble comes down and then stops are raided and then the bubble moves, but the stops aren't being raided. So I think the retail apes from Reddit have got involved, or it's that crypto hodl psychology where they'll hold on, and so it could just be that. So I think that's what's happening in the Aussie potentially, because what would happen maybe, let's say for the pound for example, the pound would come over here, stops would get raided, and then it would move, and that would be a normal, but Aussie isn't behaving normally. So I think this has got some weird retail ape crypto hodl stuff going on, where they're just holding on without any risk management, and so I think it's going to continue to destroy them, and then it'll just be horrible for them, and then maybe they'll learn their lesson. So yeah, so we've got to keep an eye on that. I think that's what's going on there potentially. Euro is moving away. It was quite a large wedge on that, and that's moving away now. So they go long Swiss now, and they're already long euro. Right, so that's that being said. So a little bit of information there from the dashboard. Also, if you wanted to subscribe, my Patreon details on the Telegram as well, and it's on this YouTube video. So let's look at some charts. Now, the thing that was like kind of bugging me quite a bit was the weekly open level for gold, 1924. We had to test it so many times yesterday, and now we're currently below the weekly open. This is your daily open. See, it says D2. So I am going to remain bearish as long as we hold below 1924, and so what you kind of want to do is wait for a candle above to invalidate that idea, and a candle below would be great, especially if you've got a bearish bias. So I know admittedly these vertical lines are a little bit strange, but they basically give you crosshairs where we opened at the particular time intervals. So there's your day and there's your week here. So as long as we remain below the weekly open, we can cut out a lot of noise and just look at that level 1924. We get a candle above that invalidates the idea. We are a sell, we've got some supply, we've got big demand down here. So 1898 seems to be a level of interest. So maybe an eye on that 1924, and also to get the patty indicator. If you don't know where to get it, it's on the starter pack in here, and you'll see MT4 powerful indicator suite. Just click on that and it's in there. So that's gold level. So 1924. Let's have a look at the dollar Swiss, because we had the buy signal at 92.92, which is down here. So we're up 23 pips on that signal. The reason for that buy was the bubble deviation. So obviously the Swiss and the dollar, they diverged over time, and that's why we got the dollar Swiss. So it's quite straightforward. Hopefully you understand the bubble logic. And so the target above, if you took it, is 93.20. So it's a 30 pip move. It's not bad. And one below is 92.85. We are above monthly pivot. We are, however, a sell at the high level, but you see the average line is indicating long because they're selling over time. So take that off, and they see how they sold it, and by selling it, price goes up, and we're above monthly pivot. So it's a good signal. Very happy. We could potentially go higher. Depends on what they do with their stops. If they move their stops higher, then we can maybe raid some more. And you'll note how we've got some supply. It's based on candle wick, so it's dead simple. It's not like rocket science or anything like that. That's obviously going to be an area of resistance because there's lots of selling pressure. Like I said in yesterday's video, look at the wicks. The wicks are very, very telling, and they give you good levels to work from. So potentially there's one up here we could target at 93.70. So dollar Swiss is a buy according to the correlation indicator. If they continue to sell it, we'll come up, and then if they push their stops higher, then we'll definitely come up to test that supply here. And this is a stronger supply because of its width. This is slightly weaker. So that's that. So I'm quite happy with the signal. Remember to be careful with the signals because we've got FOMC today, if we get any. Let's look at the Euro USD. And we'll have a look at some candle wicks and have a look what we're seeing. So there's one down here, there. So that's 108.06. So potentially we'll come down there. We are a sell. We have been for a long, long time. There's the 50% crossover here at 111.20 ish. Yeah. So they went long here. Maybe they were looking at prior price action and they thought, oh, this looks quite good, but the thing is they're slack risk management and they added long. They should have maybe got out. They need to know when to exit. That's the trouble with the retail guys. I mean, there would have been a good stop. That's where you should have exited and then had to chop on that level for 16 hours. So it made them feel very uncertain about direction. And they think, oh, maybe I shouldn't have got out there. Maybe it'll hold. Actually, we're above that level now. Yeah, maybe what I'll do is I'll go long because that level's holding, and then of course it fell. And you can see how this price is manipulated by looking at your market structure on the order book. So these are the current positions, and these are the orders. And what happens is that this will change, and it will fool people into believing that it's going to come up or it's going to come down. And we're currently rating the SLC below 108.84. Yep, we're dead on it now, so it's a good demo. And what you want to do is try and detect the size after. If it's a lot smaller, then we could have a reversal. If it's larger, then they just move their stops. So the one above is 109.90, and we are a sell at the correlation matrix indicator, and we are a sell here as well, and they went long up here. So let's look at GU. Remember I was saying about the spreadsheet and how EU and GU could be signaling like some clear indicator, and because they're aligning at the dynamic and static level. So this is what I refer to. So EU and GU could be clear for a signal today. What you want to try and do is avoid the orange and greens and the red and greens. You want red, 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 green, green, green. See how that's aligning? So one above is 130.185, one below is 130.50. We are a sell, and we have been for ages, and we're coming up to that support, which is interesting, 130.51. So we break that, we'll get the SLC, and monthly pivots there as well. So I'll look at Aussie and then I'll wrap up the video. But hopefully these videos are useful. You want to try and get technicals and sentiment to align. And we're up by, on above is 75.95, and below is very, very large at 74.30. Lots of stops down here that need to be taken out, and so yeah, maybe that's what's going to happen. We've got FOMC, so we could see this roller coaster a little bit. RBA were quite hawkish. They took the word patience out of their statement, so they're not patiently waiting anymore. So that's quite hawkish from the RBA. So this fundamentally can do quite well. Sentimentally, we're quite strong, and there's your monthly pivot down there. And lastly, we'll look at AJ, because we've got some supply overhead from that candle wick here. So do be aware of this area. It's quite large. There's a lot of selling pressure there. There's a large candle wick. It's a 43 pip candle wick. So this is going to be a fairly decent resistance. Along above 94.32 will take you to the SLC, where we might come down potentially. It all depends if we get a new candle above, or whether or not we're going to remain in that chop zone. I think this might be likely. It might just get that, and we might fall, and we'll be in that sideways up to FOMC. So we are a buy. However, this is saying sell because the yen is strengthening. So yeah, keep an eye on that 94.35 and 93.50. So I'll wrap up now. Remember, we've got FOMC. Trade carefully, know where your exit is, and also try and keep your losses small as well, because you want to be in for the long term. If you have large losses, you'll blow your account. And remember, we're here for the long haul as well, so it doesn't matter if you're using small sizes. It's all about preservation of capital and thinking about the long term as well, and knowing when to trade and when not to. Yesterday everything was out of bonk pretty much, apart from Aussie and USD, and now things are starting to like align now. So maybe EU and GU might be good ones today, but keep an eye on that anyway, and that's on the dashboard. So have a good day, and I'll speak to you tomorrow.